What's up, everybody? This is Jack from Crypto 49er, bringing you my knowledge in cryptocurrency. Today I want to talk about why fundamental analysis doesn't work with crypto. So in the stock market, there are three groups of traders: people that believe in the fundamentals, the intrinsic value, what something's truly worth; people that only look at technical indicators, so technical analysis; and people that try to look at both. If you think that only the people that look at both the fundamentals and technical indicators make money, you are absolutely wrong. The fact is, all three groups make money. The only people that don't make money, the average investor who is too busy with their lives to understand market cycles or read 10Ks and 10Qs. And I'm going to explain what the 10Ks and 10Qs are. So in cryptocurrency, there are people that think they are using fundamental analysis to determine the intrinsic value. There are people that use technical indicators to make money, and there are people that use technical indicators to create content for their YouTube channel. So I feel like I'm probably towards the latter one of them just because I'm not a day trader. But anyway, in 2018, only the latter two are making money. The fundamental analysis people are so deep in the red that they have to adjust their predictions or just completely go dark or talk about something else. So why doesn't fundamental analysis work with crypto? It's pretty simple. Cryptocurrency isn't a regulated industry. There are no requirements for any crypto to report their earnings or losses in a quarterly, a 10Q, and annual statements, a 10K, to define their performance. So this is a 10K annual filing that Alphabet, better known as Google, because really this is just how they reformed the company and put Google under one branch of Alphabet, but there's a lot of different companies under Alphabet. But Google is the only branch that really makes money. All these other branches don't really make money. But point being, this is the report that they have to file every year with the federal government in the United States because Alphabet or Google is a United States company. And every year they have to file this. In this case, you can see 91-page report right here, detailing the exact information about the business, what they're concerned about, the financial data, all this information that is really valuable for people that believe in the fundamentals. Things that if you truly believe in the fundamentals, you would read through this entire report to make sure you understand truly what this business is doing. So these same reports are what Warren Buffett, Ray Dalio, Howard Marks, these are titans of the financial industry. If you don't know anyone past Warren Buffett, you just Google their names, you'll definitely find out who they are. They're very, very powerful. They're very, very smart people in the financial industry. And they rely on these reports to determine what to invest in. So if there are no reports for crypto, because again, crypto is not regulated, what are these so-called fundamental analysts relying on? So I'm going to cover three that I have heard of, and maybe you have heard of them. I know at least one of them you probably definitely have heard of. And the other two, I'll just cover anyway. The first one is Tom Lee. So he is what people call a permabull. Basically, he constantly believes that we are in a bull market, even though right now we are below 5,000 in Bitcoin price, and we have basically dropped from 20,000. So it's more than 75% in terms of a price drop. And he still believes that we are in a bull market because he believes that by the end of 2018, we're going back up to 15,000. So we have less than 2 months away. And originally, he predicted, this is before Bitcoin dropped from 6,000 to below 5,000. He predicted 25,000 by the end of 2018. So where the heck is he getting this idea that the price of Bitcoin is worth $25,000? So his idea is the mining cost and news. So he based on the fact that a Bitcoin is worth, to mine a Bitcoin is about $7,000. And what he does is he multiplies by that by 2.5 times. And that is what he thinks the intrinsic value of Bitcoin is. So 2.5 times of 7,000 is 21,000. So and then he adjusts that slightly up and down based on the news. So he was thinking, the back exchange coming out, the ETF from Van Eck, those things will really drive the market up to all-time highs again. Originally 25,000 is a new all-time high. So he thinks those things would make Bitcoin jump up massively. And so far, I'm almost 100% sure he's wrong at this point, even at 15,000. But we'll have to wait till December 31st to see. So the next one, Tika Tiwari. So this guy, I mean, I don't even want to mention what company he works for, but point being is he predicted $40,000 Bitcoin by the end of 2018. And back in July of this year, 2018, he announced the bear market is over. It's like time to get back into Bitcoin. The problem with these fundamental analysts, in his case, in Tika's case, he relies on insider discussion with altcoin elites. So, and the news, basically, those are two things that he relies on. And also the fact that he has this belief that all the big banks are getting into crypto right now, and that's the reason why you need to buy when the big banks buy in, not when after they got in, because by then it's too late. So that's his general idea. So I have to say 40,000, he's completely wrong. There's no way. I'll say that right now. Today he's already wrong. There's no way it's getting back to 40,000. So there's no way the bear market ended, obviously, too. When he announced it back in July that the bear market ended, that's not true either, obviously, because when we were at July, we were like, what, 6,000-7,000 in price, and now we are like half of that at this point. So completely wrong. So, and it just shows you that, you know, insider discussions and all the access he has to these people, because he's traveled all around the world to discuss this topic with other altcoiners, and I mean, there's no way that they truly know the price of Bitcoin. I mean, there's just no way you can predict based on just these two information on the news and just discussion of other people. It doesn't help you predict this stuff. I mean, what it does do, I think, is that it makes you think you know, because you're really diving yourself deep into the circle of crypto elites. But it's not just the crypto elites that buying and selling crypto. They are definitely a specific group, you know, that you could probably call whales. A lot of them have been in crypto for so long that they are whales, and they can basically move the market up and down. But that doesn't mean that the rest of the public doesn't buy and sell into crypto. And basically, the rest of the public is just completely bare on crypto right now. And there's no way that these crypto elites are able to move the prices up to back to 40,000. So last I heard, I mean, he's basically talking about stocks now. He just completely stopped talking about crypto because he's been wrong. So the last one is Ronnie Moaz. So Ronnie Moaz, what his claim to fame was, he's saying that he's the most accurate trader. He had the most predictions in the stock market before he got into crypto. So that's his claim to fame, right? And what he said he uses to find the best cryptos to buy into is his 155 variable computer model that he developed back in 2003. Again, 2003, you know what we had back in 2003? We were still in, I would say, like beginning of Web 2.0. I think we had Google, but we didn't have YouTube. We didn't have Facebook. So we didn't have Twitter. So there is a lot of these companies that didn't exist yet when he developed this computer model that he's still using to this day. Not saying that it's not effective, but again, this 2003 model that he developed existed again before Bitcoin. You think this computer model is going to help him predict when's the best time to buy into cryptocurrency? I don't really think so. So he predicted originally back in early 2018, let's say January, February, before, you know, the market started tanking. He predicted a Bitcoin price of 28,000 by the end of 2018. And then when it started dropping around, let's say February, he said, oh, and you know what? No, I meant 2019. So he was so lazy in terms of even his prediction. He's just like, oh, forget it. I'm not even about to change my price. I'm just going to say, hey, here is my same price. I'm just going to predict it 1 year later. 2019 now is the price that, you know, 28,000. That's when Bitcoin would hit 28,000, 2019. So he didn't even bother to change his prediction. He's just like, I'm just going to change it by year. It'll be fine. It's just one of those things where I mean, it almost bugs me because it's like, okay, I understand, predicting prices is hard and almost, you don't get credit for making right prediction. I mean, maybe you do. I mean, he uses it for, as his one of his claim to fame, right? For making good predictions in the stock market. But he doesn't even bother to change his price prediction. He just say, "Oh, I'm just gonna change the year and I'm just gonna get called out and that's it." So this is, I don't know. That's just messed up in my mind because seriously, it's just like at least change it a little bit. Maybe change it to 30,000 or something. Make it sound like you actually did some more work. But the fact that you didn't even bother to change the price and just say you moved it by year, that's just sad. So anyway, those are the three fundamental analysts, the analysts that only use fundamental analysis in their decision on which crypto to buy. None of these people will hit their prediction by the end of 2018. There's just one simple fact that they're failing to contend. This is a bear market, and there's nothing, no news, no change in government regulation, no new technology that will shake the hold that the bears have. The only thing that will shake the bear off is time. That's it. Nothing else. If they are, and I know that at least Tika and Ronnie, they actually make these reports that their subscribers pay for to help them decide which coins to buy into. I mean, I don't pay for these reports because I find that kind of ridiculous, but mainly because of this. If they are making any prediction to buy into any crypto in 2018, it has just been dead wrong. They've completely been dead wrong. And it's just simple, right? The only time to have bought into crypto is 2016, not 2018. I mean, even 2017, if they were telling people to sell, then they would make sense by the end of 2017. But they didn't do that. So, and the worst thing is, I'm sure they have been making predictions to ask people to buy into crypto in 2018. And that is just them not even looking at the market and realizing we are in a completely bear market. So who are the people that made money in 2018? So there are two that I'll bring up right here. The first one is Philicon. So he's basically a traveling day trader at this point. I mean, you can say that he has made some wacky predictions. I think some people say that they got wrecked by the predictions that he made in terms of the Bitcoin price. I mean, I can't really find any. Maybe he deleted the tweets. I don't really know. But point being, if you see his videos from this year and even last year, he's a cocky son of a gun, So he shows you his trades. He shows you he's making money in those videos, showing you that. So he knows what he's doing. I mean, maybe is he not showing everything? Maybe there are losses. True, but the videos that he makes, they were live videos. So he was making them live and just showing you these are the trades I'm entering in, these are the trades I'm exiting out of at this time. So, and he was showing you how he's making money. So there's nothing for him to hide. Not like the other, not like the fundamental analyst people where they're like, oh, hey, I have this computer model that you can't touch. I'm not going to show you what is inside it. Obviously, this is my computer model, or like my insider information with these crypto elites that no one have access to but me. So you can't get this information from anyone else. So Philicon, he at least shows you live that he's making money. So whether or not his predictions for the price of Bitcoin is correct, it doesn't matter because he's showing you that he's making money. And I'm not saying that the other fundamental analyst people are not making money. They are obviously making money off of their subscribers, and people are willing to pay them for their research. But are they making money from crypto itself in 2018? The answer is no. Is Philicon making money from crypto in 2018? Yes. And the other thing is, Philicon not only trades in long position, he likes to short. He loves shorting more than the long. So he's making a ton of money because he's able to make money from the short market as well as the long market. And right now it's easier to short than long, so that's why he's making a ton of money from this. So the second one is Coinbase. So he's a traveling Bitcoin maximalist teacher and YouTuber. His claim to fame was that he basically predicted multiple price points for Bitcoin in 2017. So, except for the last one, when he said that the Bitcoin would peak out at 7,500 and then went all the way up to 20,000. So, hey, no one's perfect, but he he doesn't even trade in Bitcoin, but that's at least that's what he says all the time. He doesn't do much trading. He does like 1 or 2 trades a year, but he does do a lot of analysis using his TD sequential system. So he just makes money from being a teacher and teaching people how to use the TD sequential system and being a trader. So that's what people want to do, because he doesn't want to do that in his life. He'd rather like to travel and be a teacher, be a YouTuber, and make enough money and not to worry too much about being a day trader and being so nervous about positions. So he is basically making money, not really from the market, but he's just showing and telling people what's going on, giving them indicators and signals. I mean, are they 100% correct? No. But did he predict that 2018 is a huge bear market? Absolutely. So he did not tell people to buy in, to this altcoin or that altcoin. He doesn't believe in altcoin in the first place. But he didn't also tell people to buy into these altcoins and just basically have them holding bags right now. Because if you bought into any altcoin in 2018, you are holding bags, period. So while both Filicon and Coinbase use totally different technical analysis, again, Coinbase uses TD sequential, Filicon uses Elliott waves, and actually he uses a lot of candlestick data, because he reads each of the candlestick like a master. Basically, those between those two, like his Elliott waves, that's what he shows off, but he really relies on the candlesticks to really understand what's happening at each candle. But anyway, between these two and how they use totally different technical analysis, they both, the most important thing is like this bold red sign right here I want to tell you, is that they both insist on putting stop losses in trades. If you're getting into a market, into a position at any point in time, they will insist that you will put in a stop loss of, like, let's say 5%, 10%, or even the previous swing low. But they will tell you definitely put in stop losses, because you don't want to be holding bags in this market. You're just going to be feeling the pain all the way through, all the way to the bottom of the bear market, and you'll be holding bags because you don't have any stop losses in. And that is one main thing that the fundamental analysis people, they don't care. The fundamental analysis people do not tell you to do that. They just say, hey, buy it now and hold it forever. I mean, essentially that. There's no exit point. It might be years before the exit point comes in. So it's not that, they don't tell you at all. It's just that, they say, hey, hold it for years. This is their plan. To hold it for like 3 to 5 years kind of thing. That's good, I guess, for people that don't follow crypto at all. And they just needed someone to really guide them, say, oh, this is the one you should invest in, that one you should invest in. But it's just like, if you're gonna do that, you have to not look at anything else. First of all, you totally have to trust the fundamental analysis that they provide. And two is, you can't look at anything else, because if you do, you are gonna be so upset with them, because you can see the price. You can't even look at the price of the crypto that you bought, because if you look at it every month, if you bought something in January, for example, every month you see it going down. Maybe it pops up a little bit in April, but then it goes back down again, down. You really cannot follow crypto if you're gonna follow these people that provide you your analysis report. You can only read the report and that's it. And then you have to completely unplug, turn off computer, and just you might even have to tell your friends and family that you didn't invest in crypto, because if you follow these people, you can't even say that you invested in crypto in 2018, because they have been so off in their price prediction. It's ridiculous. Instead of telling people to put stop losses, these fundamental analysis people tell you to diversify your portfolio, or only put in a very small amount, about $100 to $300 into crypto, and let it ride. Basically it. But the problem is, they don't specify what you should diversify in. So if you diversify by putting it into 20 different altcoins, you're totally screwed. So if you bought in, let's say that each, whoever you follow Tika, you follow Ronnie, whatever, and then they tell you put in $100 in here, $200 in here, $100 in here. Before you know it, you invested in $1,000 into 5 altcoins in January. And then in February, you invest in 2 more. And in March, you invest in 2 more. Before you know, you are invested in 20 different altcoins. And they have all gone down significantly, because then all they can tell you now is hold on to your bags and wait for 2019 or maybe 2020, whatever it is, that when these coins actually pop. It is not a good time to be following these people. So the bottom line is this. There's no point to buy the dip to hodl in a bear market, and that's what you do when you're following the fundamental analysis people. All you're doing is temporarily lifting the markets up so the shorts can come in and take profits. Because again, you are going against the trend. The trend right now, we are in a bear trend, and you are buying into these dips, right? You're like, because everyone's saying buy the dip. So, and then you're buying into these dips where it's going down a little bit, and then you buy to push it back up a little bit, right? But then when you push it up, all these shorts are going to come in to short it back down, and they're going to take all those profits, because all these people that are buying into the dip are going to get shorted back out, and then all these shorts are coming in to make money from you guys, which is great for the shorts, so Silicon is loving it. When you guys are buying into the dip, he's loving it, because you know what that means? He's going to make more money. So if you truly believe in the future of crypto, you don't have to buy into the dip. Just buy when the bear market is over. That's simple, So it's almost like this. Unfortunately, if you're paying for any of these subscriptions for these other people that charge you for their reports, and I think they charge you on an annual basis, so you kind of screwed anyway. But if they were charging you on a monthly basis, I would definitely cancel out and cut out that report and just say, hey, you know what? I'll wait till when the bear market is over, and then maybe I'll listen to you, maybe, because the main thing is the fundamental analysts don't rely on any technical indicators, so they don't know when the market hits bottom. I mean, if you watch, there's a video, I'll link to it, where Coinbase has an interview with Ronnie Moaz, and Ronnie Moaz says it. He says it multiple times also in his Twitter. He doesn't believe in technical analysis. He even hates it, to the point where if he sees there is a technical trend, he will lower the ratings of that particular crypto that he's looking at. So that's why it's just like, it's completely frustrating almost. Like I said, it's good for the stock market for people that actually use both indicators, both fundamental and technical. But this guy is so into fundamentals that he's anti-technical analysis, and that's just ridiculous. I mean, at the end of the day, technical analysis is just it's just a gauge of the market sentiment. It's just you're gauging what the general public is believing the price will go to. So that's all you are doing with technical analysis. But he's already doing that with his fundamental analysis. And I'm going to go back up to here. He basically, again, he uses his heavy fundamental subjective overlay. So he basically is doing a market analysis, but without looking at technical indicators. It just doesn't even make sense in my mind what he's trying to do. But hey, you know what? Whatever makes people money. It just won't make you money. But if you believe in technical indicators just a little bit, okay, even if you, let's say you don't have the level that Silicon has or Coinbase have in terms of reading technical indicators, you could just use something as simple as the Mayer multiple to help find the bottom. So, and I have talked about Mayer multiple in the past, but it's a very simple indicator. And I even wrote and created the indicator here on TradingView. So you can just look at Mayer multiple, and I think I'll put a link into this in this video as well. You guys can find it. It's a very simple indicator, the one I made it here anyway. It's all you're doing is, so right now you can see it's all green. Green means it's quote unquote safe to invest, but it also means that it's probably not. It's really truly in a bear market when it's really green. And when we're in yellow, we're basically in a could be in a building up to a bull market, or we could be in a declining phase. As you can see right here, this is from 2017 when we're in red, right? Red is obviously, for the Mayer multiple, is simply do not buy. So that's the time when you're buying, you're effing gonna fully freaking get screwed, because you buy anywhere here and you can still probably make some gains. It really, because what red really means is the volatility is extremely volatile when you buy over here. Doesn't mean you can't make money, but you just have to know when to exit out very quickly. So let's say you buy here at the one of the earlier signs of when the main multiple turns red, you're buying at 10,000. You can still double your money if you sold it exactly at 19,000. Basically, you could have doubled your money, but only if you're super accurate in terms of your sell position. Otherwise, if you hold it for too long, you're gonna be losing your money basically. So it's very risky to buy in the red. But the point being, you can see now that we are from March, so it's been, let's say, late March, all the way to now, we have been in green. So meaning we have been in a bear market for last 9 months now. So all you have to do to decide when the market is exiting the bear is simply looking at it this way. When the market goes from green to yellow, that's basically it. That's the indicator that you can use to help you determine that we are exiting the bear market. It might be like, let's say it won't be like a week and then it goes back down to green. In that case, you can even wait a couple more weeks before determining when we have left the bear market. And actually, if you scroll up through a little bit here, this is from June and July of 2015, you actually see that we actually went back down to green. So yeah, so it's not a great feeling. If you bought it here, for example, let's say you bought it when it first turned yellow, you're like, I'm waiting for the first yellow, first indicator that the main multiple turned yellow, and now I can buy into it. So now it is at 256. But then a couple of months later, in August and September, now it's down to 228. So you lost basically 10% of your Bitcoin investment. In this case, it's basically purely based on Bitcoin. And this is really what you should use main multiple with, not with any other altcoins. It really is just for Bitcoin, because of the fact that Bitcoin is the leading indicator for when all the entire cryptocurrency exits out of the bear market. So the only thing is, once crypto exits out of bear market, then all the other altcoins can pop much higher and much faster than Bitcoin does. That is fine. So at that point, it's a little bit harder. You have to do more research to determine what coins to buy to get the maximum reward. That's true. But right now, because we have been in the bear, and this bear is similar to the bear from 2015 and 2014. That one lasts even longer. So, and we're still in the bear market right now. So we could still have like another 6 months before we exit out. So look at it. Like, think of it, November 2014. They had another 8 months before they exit out of that previous bear market. It could be that long. I don't know. But point being, even though when we thought it exited, it actually dropped back down a little bit, but it was a 10% drop. So it wasn't significant to the point where you're screaming and pulling your hair out, because you know what? I mean, we already experienced a 20% drop in like the last week plus, so this is nothing compared to that. And believe it or not, once that pullback happened, and then we went back to we went back to yellow in the main multiple here, the indicator that I built out. We are heading towards a bull market that lasted again from 2015, end of 2015, all the way to 2017. So we talking about like basically a 2-year bull run that we had in terms of Bitcoin. So again, you should just use the main multiple to help find the bottom. When it is above 1, which we haven't seen in over 6 months, I mean over 9 months now, we are officially out. You can even wait a few weeks just to be safe. The argument that those fundamental analysis people make, crypto is a life-changing investment, and that's the one that I hear all the time from those fundamental analysis. I mean, it applies whether you're buying it at the end of the bear market or during the bear market. The only difference is how much more crypto you will have if you buy towards the end of the bear market rather than the beginning. If you've been buying it, you've been listening to those fundamental analysis people and buying it in January, you have so much less money to buy than if you're buying now. Because you basically, not that you have less money, you have the same amount of money, right? You bought, $500 worth of Bitcoin in January compared to you buy $500 worth of Bitcoin now. I mean, the same amount you're using to buy Bitcoin, except that now you're buying like a 0.1 Bitcoin, maybe a 0.12 or 0.13. But compared to back then, you couldn't even buy 0.1 Bitcoin. You could buy like maybe a half of that amount, because you're buying it at a point when the market was just entering the bear. So that's the main difference. But based on the history, even if you're lucky and buy at the bottom, you're just gonna wallow for a while before you see upward movement. So let me just go back to the chart here for a second. So this is the end of the bear market, as I was mentioning before, right? Around June, July, like at the beginning of July, that's when the end of the bear market. That's when we exit out of bear market, according to the Mayer multiple. But this is when we were at the absolute bottom of the bear, right over here, in January 14th. So if you bought it here, you would have bought it at $210. So it's a good price for Bitcoin, obviously, at that point in time. But and the Mayer multiple, the green was 0.48. So actually, I think it was a little lower. No, the day before was 0.39. So you're buying it actually at 171. It's a great price. But does it really matter if you're buying it at 171 versus 248? I mean, it's a big difference. It's like a 33% jump, whatever it is. Like it's a huge amount jump. You can't really predict when, you know, that was actually the bottom. No one knew at that point that was actually the bottom. You could have been buying anywhere around here. You could bought right afterwards. Like, you know, oh, I'm just waiting for the low peak, and you bought at 274, which is end up being higher than when we exit out of the bear market. So really, what that means, if you bought in January, you had another 6 months before we exit out the bear market, and you had to deal with all these ups and downs again, all the way through until we officially exited out. So why suffer the agony? Just buy when the bear market is over. So that's basically it, guys. So that's my video for today. Before I go, I just want to cover a couple of things. So again, I have my Patreon channel where I actually, so even though I just cover all that stuff about not buying into a bear market right now because it's hard to make money. But if you want my strategy, because I do make money from the bear market, and I'm showing you right now, this is my swing trade profits from this year. So again, this strategy I just developed probably around like June or July of this year, and I didn't really want to, you know, I was thinking when to get into it, and I finally was able to use it in August of this year, and I made some money out of it. So I made 21% from Bitcoin Cash, I made 12% from Litecoin, so pretty decent profits, not crazy, not extreme, but they were profits. And it's, like I said, it's very hard to make money in the bear market if you're only long. These are only long positions. Again, I'm not shorting the market, I'm just going long. So basically, I'm going against the trend, and I'm still making profits. So if you want to find out what my strategy is to make profits in the bear market, just become a patron on my Patreon. It's a $2 per month. It's like basically nothing. I'll be putting up an article a month that really just details the analysis, like strategies that I would have. Basically, these are all the strategies I would have for making money during bear markets, bull markets. I mean, I have a very couple of strategies planned out for the bull market. Granted, that's probably at least 6 months to a year away. So we don't know for sure, but you have to be prepared for when the time comes. And that's why I have all that planned out already. So I definitely, probably my next month's article on Patreon would cover the strategy to make money during a bull market. So I haven't decided yet exactly, but if you want the strategy that I have written out in detail, definitely support me on Patreon. I have a link to it down below, so you can click on it, check it out. And I have other tiers as well if you want to check out as in terms of information and what I provide. And the other thing is, I have a t-shirt that I make as well on Teespring, so check that out as well. Again, also link down below. But that's my video for today, guys. Let me know what you guys think. Leave a comment down below. Like and subscribe. If it isn't crypto, it isn't worth mining. It isn't worth speculating. Peace out.